Exercise 519 is giving you an opportunity to compare the percentage of receivables method, which is the first method, percentage of receivables, with the percentage of credit sales. Okay, so this method is the percentage of receivables, and this method is the percentage of credit sales. You'll find that they give pretty different numbers in this problem, but the numbers could be bigger or smaller under either method depending on the circumstances. Well, bad debt expense, using the way you know, using the percentage of receivables, we have to look at the receivables, the accounts receivables, and the allowance for doubtful accounts or the allowance for uncollectible accounts. And they tell us here that the accounts receivable at the end of the year is $55,000, and they tell us that there's an $1,100 credit balance, and they say under this method they tell us, they estimate that 12% of the receivables, so 12% of 55,000, will not be collected. So let's bring in our trusty TI-83. 55,000 times 0.12 is 6,600. So that's where we want to end up, is 6,600. We had 11. So again, just like we did before, what do we have to figure out? This number. So it's 1100 plus X equals 6,600. X equals 6,600 minus 1100. X therefore is 5,500. That's our bad debt expense and our entry to allowance, 5,500. So our bad debt expense under the percentage of receivables, 5,500, and allowance for uncollectibles, 5,500. Now, the second method, the percentage of credit sales method, is really a whole lot simpler. They tell us the credit sales are 260,000. You're not going to collect 3% of those, they estimate. So 3% of 268,000, 7,800. Debit bad debt expense, 7,800. Credit allowance for uncollectibles, 7,800. And we don't care what is in the account before or after. We just base it strictly on a percentage of credit sales. Now, next part of this question says, what's the effective net income for each method? I don't really want to talk about that because it varies depending on the balance in the account. In this case, we had a credit balance, so our bad debt expense was lower in this method, but it could have been the other way around. So let's just ignore the last part of that question because it's irrelevant and confusing.